everyone, Namaste, good evening, good morning, Shabba Khair, all of you. Welcome to this session of understanding the relevant costing principles in a quick way in under 30 minutes. Now, before I take up anything, let's first quickly understand in a crisp way what is relevant costing. Relevant costing is simply about considering the relevant cost. Now you'll say, ma'am, what does it mean? It only means look at the costs that are going to impact your decision making. For example, I have to plan to buy a new car. Then what are the relevant costs for me when I'm planning to buy my new car? My relevant cost would be, what is the purchase cost of the car? What is maybe the insurance cost of the car? Okay, then what would be, let's say, the other road tax, repairs and maintenance, cost of car. So what do you see here? That I'm only looking at the cost that is going to incur in the future. I'm only looking at the cost which is going to be an incremental cost. That means additional cost in the future. I am not looking at what is the repairs and maintenance of my existing car. I am not looking at how much was the purchase cost of my existing car, because that expense already got incurred. So how is this going to impact my future expenses? Not at all. So relevant costing is simply about considering your future expenses. So relevant costing is only about considering the expenses that meet these criteria. That is, they are future oriented, they are incremental, additional expenses, they are specific expenses. Let's see, specific to the decision that you are taking, specific to the product to which it is concerning. In my example, it was car. Then they are cash expenses, because we don't take any expense which are notional, like which is a depreciation, for example, which is any provision. We only take expenses which are actually going to be incurred, because that is what is going to help me take a decision. Let's say I have to decide whether I should be going for a manufacturing of a particular product or not. So then I need actual expenses that would help me in taking this decision. Next is opportunity cost. That is basically the cost for the next best alternative that you are foregoing. Let's take an example. Let's say that I have to choose between two projects. If I go with project 1, I'm having a contribution earning of $30 per unit. However, if I go for option number 2, then I'm losing on that contribution which I would have earned on process 1. Okay, so now if I have to check a price for process 2, or if I'm estimating the costs which are important and relevant for me for process 2, then guys, don't you think I will add the contribution also that I'm potentially losing on process 1? Because I cannot take a process at the cost of losing a contribution on the other process. I have to make sure that the process 1 lost contribution gets covered in process 2. So that is also going to be a relevant cost for me, which is opportunity cost. So contrary to it and opposite to it, which are the non-relevant costs? Number 1, the cost that has already taken place in the past, which is my sunk cost, okay, that we have already incurred into the past. Then the other cost can be the fixed cost. For example, if you are doing a production and you are paying rent for a factory, then whether you make a production for 100 units, 200 units, 500 units, up till the capacity is not exceeded, you'll pay the same shop rent. So it won't affect if we're taking the new decision or not, because whether you accept the decision or you reject it, the fixed cost will remain fixed. So here, fixed cost is my non-relevant cost. Likewise, notional cost that I've already discussed for depreciation, and the committed cost as well. What are committed costs? Let's say I enter into a commitment, a contract, a long-term contract with a customer that I'm going to supply 24,000 units of material to it, in the long run at a certain price. So now in future, if I have to enter in, I have to look for new material supplies, then this long-term contract will not have any impact, because I've already entered into this in the past. Like today I've entered into it. So after 6 months, do you think it is going to have any impact? No, because price is fixed, quantity is fixed. So it is like a past cost or sunk cost or a committed cost that is already taking place. So then it is not going to have any impact on the future decisions that I'm going to take with regard to buying of new material or not. Okay, so I hope that gives you clarity. Boss, I will take few examples, but before that, let me make you understand few terms and few concepts. First term is very important, current replacement cost. This term you will find at a lot of places in relevant costing. What is current replacement cost? My friends, current replacement cost is the current purchase price in simple terms. That is at the cost at which you are going to replace the material which is already there in the production, which is already there and which is used by other products also. So you need to replace it. So at what price you can replace it when you buy it currently from the market? At the current market price, which is the current replacement cost. Next is current resale value. So let's say if my inventory is not in use. Okay, I've got material inventory, but it is not in use. Then in that case, I would recommend or I would do is I would sell it on scrap as a scrap. But however, if I have a new project or a new process that requires to use that material, I'm losing that scrap value. That is my current resale value. That basically at what value you can resell your product currently, which you are losing because you're not reselling it and you're giving it to somebody else. Right? And you're using it in, not giving it to somebody else, but you're using it some other processes. I hope it is absolutely crystal clear to all of you. Let's go to the third one, opportunity cost, already discussed. Okay, now I take up some very important concepts for your relevant costing. Okay, number one, how do we determine the relevant cost of material? Of a material, how would you determine the relevant cost? So boss, the most important and deciding factor is, and logically let's understand that is the material in stock or not? Boss, if the material is not in stock, then how would you acquire material? At the current replacement cost, you will buy it from the market. However, if the material isn't already in stock, then there can be three instances. Number one instance, your material is in stock, but it is used by all the other processes. So it is continuously in use. So you need to replenish the material stock, right? At what rate you will replenish it? At what cost? Current replacement cost. Of course, logical because you will buy it from the market and replenish it. Number two, if they have material in stock but it is not in use. Remember I just explained that term? Yes, current resale value will be my relevant cost. Why? Because it is not in use by any other process. So the best I can do is sell it as a scrap. But if I'm using it in my process, new one right now, so then I'm losing that scrap value, which becomes my relevant cost. Third is when your material is in scarce supply. So now opportunity cost concept comes in because now you will lose you will take the next best alternative. So basically, let's say my material is in scarce supply. My material was in the production department A, not doing the process, and now we are going to use it in process B. So then process A will not be able to continue. We will lose contribution over there. Remember the definition. So what is my main aim here? To cover that contribution. Comes in again a very important point. Ma'am, will we consider the purchase cost of material? You guys tell me. When did you incur the purchase cost? In the past. So it's a sunk cost. Will you include it for your relevant costing? No. Because my cost is in relation to a future transaction, future process, incremental. So past and sunk have no role. Let's take another concept of relevant costing for labor and variable overheads. Boss, when I talk about labor and variable overheads, again, the same structure we will take up, but here from the labor point of view. And why do I take variable overheads also here, guys? Because I think in the entire costing concepts, we know one thing for sure. Variable overhead is dependent on hours, and number of hours is determined by labor. Correct? So now, quickly, labor is not that here the two criteria are Does your labor have spare time? Let's take an example. I've been employed by the entity for doing 9 to 6 job. Okay. Now, if I work for 4 hours and my other 4 hours are free, can my entity give me another project? Yes. Will I ask for more salary? No. So at the same salary, I have spare capacity, I'll work for it. So my relevant cost would be nil. Likewise here, my labor has spare capacity. So then you make them work. No relevant cost because you don't have to pay anything extra. They've already been paid for that time. Secondly, if your labor does not have spare capacity, now what best you can do is hire from the market. At what rate you will hire? Current rate. Clear? Because you will pay them what is currently going in the market. Next, your labor is working at full capacity, you cannot hire. So now you have two options. First option is you move labor from one process to another process, like material we did. But here labor is going to work in future, so we need to pay them labor rate also in the future. Material was an item, goods that we have already bought in the past. So it was like a past cost, right? Because that cost was incurred. But for labor in future, when they do more work, more hours that they're doing in this process, and if they're paid on hourly basis, then more hours means more hourly rate that we are going to bear. Correct. But along with this, since they moved from process 1 to process 2, what I have to cover more? Think. Absolutely correct. Lost contribution. That was lost because we moved the labor from process 1 to process 2. We lost on the contribution. So that also will be covered. So here my relevant cost will be variable cost per hour plus lost contribution. Very good. Let's go forward. Let's take the next one. Now I'll take up relevant cost of machinery. So what is the relevant cost of machinery? Let's take. So we will not take the fixed cost or the notional cost like depreciation, like the purchase cost. No. For me, the relevant cost will be the regular day-to-day expenses like repairs, like maintenance, like hire charges. And also one more very important relevant cost. What is that, guys? Fall in the resale value of the plant and machinery. Let's take an example. Let's take that if I was reselling the plant and machinery now, I could fetch up 5,000 as the resale value. But now this new project comes in and I have to put my machinery to this project because only this machinery can produce these units. So now I can resell the machine or I can sell the machine after a year. If I sell the machine after a year, I will sell it for 2,000. Do you find a loss or a fall in the resale value? Yes, by 3,000. So this is the relevant cost because this now I would like to cover from the new project that we are doing. Clear? I'll look at more exam scenarios, but why don't we have one question discussion where we'll discuss and we will look into the relevant costing discussion so that we are clear with the concept that we have covered. Let's do it here. Okay, so I'll take up this very interesting question. Okay, and let's discuss it here. Okay, now let's read the question. I solved some portions so that it's very clear and very, very easy for us to go ahead. However, I think it's better. Yeah, so let's look at this question. Emmerdale has asked to quote a price for a one-off contract. The following information is available. Materials, please focus. The contract requires 3,000 kgs of material K, which is a material used regularly by the company and other production. Used regularly. This tells me I have to use the current replacement cost. Okay, now. The company has 2,000 kgs of material K currently in use which has been purchased last month for a total cost of 19,600. Since then the price per kilogram has increased by 5%. So we have to get what is the current price. How will I get the current price? Now 19,600 is the total cost for 2,000 kgs. Can we get the cost per kg? So cost per kg will be 19,600 by 2000. If I do it on calculators, okay, if I do it on calculators, it gives me yes, it gives me 9.8 per kg. Now we have to add 5% to it because the cost has increased. So let's multiply it by 105% and I get my value as 10.29 per kg. So that means this is my current replacement cost. So material K will be 3000 multiplied by 10.29. Let's have this verification. So which is correct. Okay, now let's do the next one. There is one more material L. Material L is there. So here if I prepare the sheet, material K cost price will be 10.29 multiplied by 3000, which is going to be 30,870. Let's do the next one. L. L is required 200 kgs. There are 250 kgs of material in stock which are not required for normal production, not in regular use. We will take current resale value. The material originally cost 3,125, not relevant. It's a sunk cost. It is not used on this contract. If not used on the contract, the stock of material will be sold for 11 per kg. So my relevant cost for material L will be 11 per kg multiplied by 200, which will be 220. Right, now moving to the next one, labor. It requires 800 hours of skilled labor. Skilled labor hour rate is 9.5 per hour. There is a shortage of skilled labor. There is shortage, means it is at full capacity and all the available skilled labor is fully employed in the company in the manufacture of P. So now we will have to take it from that process product P to this product. The following information relates to product P: selling price less skilled labor less other variable cost. So this is the contribution, and understand it is the contribution per unit. What is the contribution per hour? And for that, the rate is given to you 9.5. Can I get number of hours? So number of hours will be 38.9.5, which is 4. So contribution per hour, can you work out? 40 divided by 4, which is 10. So now what is the lost contribution per hour? 10. So my skilled labor relevant cost will be what, guys? We add two things, right? Lost contribution plus normal labor rate, because that needs to be paid to them. Normal rate, labor rate is 9.5. So we will do 9.5 plus 10 multiplied by, we require 800 hours. So it will be equal to how much? Let's do the quick calculation. 19.5 multiplied by 800. 15,600. No other cost is there. So my relevant costing would be 15,600 plus 30870 plus 220. So I get 46690 is my total relevant cost. I hope now the concept is absolutely clear. Okay, let's move forward and let's do one more topic and one more question. So guys, now you can have this applicable in multiple exam related scenarios. Like you can have a minimum price decisions. Minimum price decisions mainly say don't focus on profits. Our aim is not to maximize profits, not to earn profits, but to make sure that your minimum cost is covered. And now you know what is the minimum cost? Relevant cost. So just to make sure your relevant cost is covered. So in exam oriented questions, when minimum price decisions are there, just focus on covering the relevant cost. Accept or reject decisions commonly done, where you will either accept it or reject it. Understand, if your relevant cost is getting covered and that is sufficiently covered by the incremental revenue that we will earn by taking the new project, then if you have a positive figure, revenue less cost is positive. It doesn't matter it is 1,000, 10,000 or 20,000, you will accept that decision. And if it is negative, rejected. Okay, now then we have make or buy decisions where we effectively see whether we should make the product in-house or outsource it to some other entity. So I will take a quick question to make you understand that how do we take those decisions. Okay, focus is on the product which has savings for out, when we take the outsourcing decision, we will choose outsourcing. If it takes extra cost to do outsourcing, then we will not outsource, we'll make it in-house. Okay, then outsourcing decisions are similar. Shutdown decisions are basically where we have to decide whether we should shut down an entity's divisions or should we continue with it. Okay, so shutdown decisions are important there. Again, we will see the relevant costing and the incremental revenue. And here most important part is your directly attributable fixed cost. If you will only take directly attributable fixed cost, because if you take allocated cost, they are not relevant. So why to take that? When you prepare the cost sheet, you will only take directly attributable fixed cost to see sales less cost. And that is positive, so then don't shut down, go ahead with that project. Next is further processing decisions where we simply see, let's see I have wheat and now I'm processing it to make it into flour or dalia. The normal regular flour that you eat and broken wheat that we also call as dalia. Okay, now till this point we say it is processed and we have incurred joint cost, which is a past cost already incurred. Now here relevant costing says go beyond it. And can we further process flour into refined flour? Check that. How will I be able to check that? Here we'll have further processing cost. From flour to refined flour, some cost will take place. And accordingly, this selling price and this selling price will be different. Of course, I assume that refined flour will sell at more price. So you take what is the incremental revenue and compare it with this further processing cost. If your selling price increase, that is there, but after further processing and before further processing, this we also call a split off point. Why? Because at this point, your wheat is split off into two products, right? So the selling price at split off point and selling price at after further processing. Just take the difference. Okay, if the difference between the two is more than the incremental cost, that is a further processing cost, then boss, go ahead with it, do the further processing and accept it because it is giving you positive result like I told you. Let's quickly take up a question on the make or buy decision. So let's take a question, guys. So now here we have a question of shellfish. Focus on my screen. So shellfish makes 4 components for WXYZ. Expected cost in the forthcoming year are giving to you here total variable cost of manufacturing. And the question says there are directly attributable fixed cost, which means if you don't manufacture them in-house, you're saving that. So directly attributable fixed cost of W, X, Y, and Z are given and committed costs are also given. Boss, this is not relevant. You know it why. Now, the subcontractor is offered 12, 21, 10 and 14. So this is the manufacturing variable cost and this is the outsourced price, which is 12, 21, 10 and 14. Now let's see here we have extra cost or savings. In the first case, remember, savings will always be represented by positive and extra cost will be represented by negative. From outsourcing point of view, here my variable cost is 12, outsourcing 14 and outsourcing is 12. We are having a saving of 2 per unit. Here 4 per unit is the extra cost. Here 7 minus 10, 3 is the extra cost. Here 12 minus 14, 2 is the extra cost. Multiply with the number of units which is given to you here. So when you multiply it, my total will be becoming 2 into 1000, 2000 savings, 4 into 2000 negative 8000 extra cost, 3 into 4000, 12,000 extra cost, and 2 into 3,000, 6,000 extra cost. Now I will adjust the directly attributable fixed cost because that's a savings. So I will reduce it. Okay. In fact, with the savings, I can add it. W saving is okay. No worries. We'll continue here. W saving is 1,000. I've added 1,000. X saving is 5,000. I've added 5,000 because savings are going to increase here. Savings are going to increase your benefit. And here savings are 6,000 and 8,000. I've added them. Now you see the net impact. Net impact that savings are in total 3,000 here. Here we have still a negative extra cost of 3,000, extra cost of 6,000 and savings of 2,000. So now which is more better option? Where we have savings, outsource it because we have savings in outsourcing. Okay, so we will outsource W and Z and we will in-house produce X and Y because it is taking extra cost to outsource them. Quickly, one point to note, your starting point in make or buy decisions will always be variable cost of manufacturing and then you compare it with outsourcing price. And we always look at from the point of view of outsourcing whether it's ease, which is better to see whether it is saving or extra cost. So I hope you all have got a crisp summary of relevant costing here. For more details, join the sessions and we'll have more details, more questions, concept notes, handwritten notes, books, everything. Okay, so that's all for today. I hope under 30 minutes relevant costing was much easier to understand. Guys, don't forget to like, subscribe the channel and share it with your friends so that everybody has 100% crystal clarity. And do ping in the comment section if you want any other topic for me to take in PM like this within 30 minutes, 15 minutes. See you for the next session. Bye.